India, like some other countries, doesn't yet have a very high insurance penetration level. So we see lots of opportunity there for growth for Lloyd's, but also some of course, the domestic market as well. And the thing is about looking at this insurance gap, and we're doing a lot of work on this also on a global level as part of the Insurance Development Forum, which is a truly global group of insurers and reinsurers from across the world. We've been looking at how can we sort of attack this insurance gap? How can we help countries, economies, cities build resilience through using insurance? And our underinsurance gap calculation for India, while it is improving and insurance penetration is increasing, we still estimate there's about a $20 billion gap, and that's on an annual basis. Meaning that if a disaster strikes, there'll be a lot of underinsurance, which basically means it'll be Indian capital that pays for it instead of perhaps foreign insurers and reinsurers, and importantly, taxpayers' money, and all of that can impact the economic growth.
When global economy refuses to go back to pre-global financial crisis days, it is indeed comforting to talk about Indian growth being robust, and robust for the next few years, if not decades. India registered a 7.6 growth rate in 2015-16. Inga Beale did talk about it. The World Bank projects 7.6% growth rate for India in 2016-17, which it said could accelerate to 7.7% in 2017-18 and 7.8% in 2018-19. The world keenly watches how the Chinese story climaxes, but the Indian story apparently has just begun.
I think we are going through that phase, and probably the Indian insurance companies will use a lot of data in underwriting decisions. There's an Insurance Information Bureau set up by the regulator which collects the market data. Today, the Indian market has a lot of data through IIP. Technology is also playing a massive disruption in the Indian insurance industry. India, as you know, is known for technology, and the insurance industry is also adopting technology to improve its efficiency for better customer service, better customer connect. So that is also changing the face of the insurance industry.
Now we have several major government programs, or nations programs, government, public, private, etc., which have been put into place over the last 2 years, and which will give tremendous possibilities inevitably for insurance and reinsurance. You have programs like the Make in India, in which we are trying to make India a manufacturing hub, not only for the huge domestic market that India presents, but when you talk to manufacturers here, they're keen to use India as a base, as a manufacturing base for exports to other countries. You have the entire Digital India program, which is going to spawn its own business opportunities. You have the skill development program in India, and so on and so forth.
When you look at what the entire London market has to offer in terms of experience and expertise, not just obviously from the region, but from other parts of the world, we can channel that experience and expertise to the region, to India and the 7 other countries that are part of SAC. So I really see the effort really here on the education and sharing of knowledge, because ultimately the innovation will come from the local markets. They will tell us what their needs are, and then we'll respond to it. And I think that interaction is going to be extremely important.
So just giving some thought to the challenges or the opportunities, I just identified 2 in each, and in many ways these were expanded upon within the London Matters report and came out in the 100 or so interviews that were conducted with risk managers, brokers and clients overseas. In terms of challenges, I would say it's regulation, local regulation, and it's, I guess, distribution or access. Regulation, to me, has always been an area that the London market has strived to be as liberal as possible in all the territories from which they want to write business. Within those countries of the SARC region, there is, I'm sure, greater or lesser liberalisation at the moment. I need to do more research on the specifics there. We've heard today that India is clearly more open-minded, more business-friendly in their outlook through their government channels and their industry itself, and that's clearly very welcome. It's a huge market, and I would hope that the other countries within the area will have a similar mindset as they work with regulators within their own region, their own continent, and globally through the international channels.
Having had a long tradition with the British for almost 200 years, I think as you venture out of the country or subcontinent, the place which gives you greatest amount of comfort is UK and the London market. I mean, we even drive on the same side of the road, so it's absolutely perfect. Now, we have pretty much imbibed a lot of the happenings of the London market, which has seeped into the Indian market in a very great manner. I mean, you have a lot of improvisations that happen to the original policies. Those wordings are incorporated in the Indian market as well. There is a lot of treaties of the Indian market that are being led or being followed in the London market. So as and when things happen or the market demands something, the London market is the first one to respond to the requirements of the clients, and the brokers, or the intermediaries, they get in touch with the London market, and then the product is floated in the Indian market as well.
In attempting to research this vast subject, I was overwhelmed with a number of available reports, statistics, other written and published documents that are available. So what I ended up doing was just sort of noting down some things that struck me in order to share with you this afternoon. One of the interesting points was that globally, insurance penetration seems to have stagnated. To try and get a reasonable picture of whether we as an industry are succeeding or failing, I think a figure of between sort of 2.5% and 3% on a non-life basis counted as premium to per capita GDP has been about the position for the last 30 years, and that's sort of very much been deemed to be, I think, a failing on our part. But then I read that the average global per capita per GDP in that time has risen by something like 60%. From $5,000 per capita to $8,000 per capita. So it's 3% of 5,000 to 3% of 8,000 success or failure. I'm not quite sure. The fastest growing segment of insurance penetration has been what's termed as the intermediate level of income, around about the $10,000 per capita GDP, and where penetration levels are rising and have risen at double the rate of other parts of the demographic.
If the industry is successfully engaged with the population, both individually on a personalised level and obviously being able to secure a relationship with both domestic and international Indian businesses to underpin what we see as growing risk. If the unthinkable happens, be it a natural disaster, we've heard from Inga, the man-made disaster, the cyber risk, financial risk, capital risk could be an issue. If we've got that, then maybe in the Indian story, the Indian economic story, the insurance industry was seen as a hero. It will be there when our the main character in our story is in a time of great stress. However, of course, if we fail, then obviously the insurance industry, as we've seen and can be, if it doesn't meet the expectation it commands, will end up the villain. But of course, the great thing is, as we've said, the opportunity's there to play a significant role in what is, and as we've heard, a dynamic story of growth over the next 10 to 20 years.